Welcome to this week's market drama. We'll begin with the S&P 500, which was up 0.4% for the week. NASDAQ was down 0.2%, a bit of a wash when it comes to the stock market. Oil prices, though, were up 6% for the week. They are now up 9% year to date. And this, of course, is in the back of the attacks in Israel, triggering supply oil concerns around the world. Now, I mentioned last week that Treasury yields have gone up significantly, especially the 10-year, 30-year, going back to levels we haven't seen since 2007. Ben Carlson brought up to my attention an interesting chart that is using Bank of America data that they kind of stitched up together, and they put up a chart that shows that so far, since 2020 to today, we've seen the biggest Treasury bear market of all time. The 10-year Treasury bond is down 25% since July 31st of 2020. The second worst was in 1860, right? So this is a pretty bad, call it last 28 months for the Treasury market, as it came from very low levels, started to rise with concerns of inflation. As I mentioned last week, I do believe that a 4.6, 4.7 Treasury yield, considering nominal GDP is roughly around 5%, or 5 to 6%, is not necessarily totally out of whack. What is out of whack, obviously, is how quickly it moved over the last 28 months and clearly created a lot of volatility for portfolios. More of a reason to have a diversified portfolio and a financial advisor to really kind of help you navigate this tough times when it comes to your bond side of your overall portfolio. Switching gears to CPI data, we had headline CPI for August at 3.7%. Core CPI, which excludes food and energy, ticked down from 4.3 to 4.1. So directionally moving down, which is what you would want to see. But it is a reminder that this is going to take a while, right? Core CPI has been stuck at that kind of 4 to 5 for a bit, and it's going to take a lot more to bring it back to 2 to 3%, which is where the Fed wants it to be before they lower interest rates. That is it for this week. Stay tuned for next week. We have retail sales and housing starts will give us some indicators of how the overall U.S. economy is faring. That's it for this week. Look forward to speaking to you next week.